Okay, just some very quick thoughts on the market on a gray day here on Cape Cod. So bond market and stock market's really sending different messages now. We've taken a full rate cut out of the front end of the treasury curve. Market's not priced for the first full 25 until September, and the subsequent 25 after that not till September of 2027. So pretty serious repricing on this oil price hike. If you've seen my recent videos, I think that's not sensible. The oil price hike in an environment where the Fed is putting downward pressure on nominal demand growth will just prove to be like a tax hike for the consumer. Stock market doesn't seem to care. Holding up quite well overall. I think the stock market to this point is the right view that we need to be looking through this. Trump's probably going to make some kind of deal because the political calculus of not doing so is so ugly. There's no constituency for a ground war here. So we have to assume he's got some near-term exit strategy. And on that point, he gave a couple interviews today suggesting he wants to be involved in the leadership change in Iran, specifically saying that Khamenei's son would be unacceptable. I think the message is the president probably doesn't think he can sell a deal with a guy with that last name. And it seems to be signaling to Iranian leadership that if you want to talk your way out of this, it'll have to be somebody else. Trump continues to allude to the Venezuela paradigm. And I think there have been back channel talks as to a possible Venezuela type solution. The next big event for markets is going to be the announcement of the supreme leader. If it's Khamenei, that's really bad news for equity markets. If it's not, the door's open to some kind of deal. This divergence between bonds and equities is very stretched. If this is going to be an elongated period of disruption to the production and transport of oil out of the Middle East, it's going to have a deleterious effect on economic growth in Europe, in the US, in China, and elsewhere. And even before this happened, equity markets just weren't showing the kind of sort of internal robustness that they'll be able to shake that off. So the bond equity divergence is going to be closed one way or the other. We'll see which way that goes as events unfold in the coming days.